Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris, and best of the season.
Same to you. Thanks for having me, Jim.
Chris, the U.S. dollar, what's the story there?
Well, the U.S. dollar, we've seen a really strong bounce this week in the dollar. A lot of it came from the news that we heard overseas from Britain identifying a second strain. They're in full lockdown, and they talked about how they think that strain has already spread outside of Britain, and it created a pretty big wave of selling in overnight trading on Sunday and Monday morning. At one point, we were seeing the small cap stock index, the Russell 2000. It was actually down 4% in overnight trading. A lot of people didn't realize it. Stock market was down like 3%, but there was quite a good recovery before the opening bell. And almost to counter that, we came up with a stimulus plan in the U.S. to try to take the wind out of the negative sales there. So overall, we've got a real mixed market this week. Stocks are trying to go higher for the holiday rally, but we've got this headline news. We got the vaccine, and are we going to need a new vaccine? We got this whole coronavirus really picking away at these markets, and it's very sector-driven, and we're seeing fear this week in the market because the VIX is up sharply. It was up 40% on Monday, and money is when it's scared, it liquidates positions, and it moves into the dollar, and we're seeing that this week. Big move in the dollar, which is putting pressure on the precious metals sector. They're trading sharply lower today, which is Tuesday.
So many people up until now were negative on the U.S. dollar. Is this a permanent switch?
I don't think it's a permanent switch. I mean, it's pretty oversold. It's had a really big drop from November 1st when it put in a high. It's been selling off since then. So we're going into almost a 2-month decline. It's oversold. And this is kind of a knee-jerk reaction, oversold bounce, kind of induced by a little bit of news that is going to scare some people to move into their currency. So I think it's a short-lived bounce just based on news. I think we're going to see sellers eventually step back in. Obviously, more stimulus, more printing, more devaluation of the dollar long-term. And that is good for metals, but in the short term, when the dollar has a really strong move to the upside, it's going to put pressure on commodities that are based in the U.S. dollar currency. So it's a short-term, I think, a blip on the chart. I think the dollar is going to struggle and most likely continue to devalue over time.
Does this have any play in interest rates?
You know, surprisingly enough, we never saw the 10-year interest rate really move on Monday when all this big news came out of the vaccine and the stock market was crashing. So it doesn't seem like the big smart money is really in any fear of this market crashing. Rates seem to be staying the same, and people aren't really flooding over to bonds. They're not doing any of that. So I think we're going to see rates continue to stay the same, and money continues to just slowly get added to the stock market. Not so much in the technology sector anymore. Right now, people are moving in to the Russell 2000 stocks, the small cap growth stocks. People are looking beyond COVID, knowing there's a vaccine. We're going to need another one, which is a whole new topic. But they're very bullish on this market. So I think we're going to continue to see this market do very well. And the small cap stocks are going to be the way to go going forward here.
We'll have more with Chris Vermeulen right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, are you bullish or bearish for gold and silver in the first quarter of the new year?
Yeah, that is a good question. I'm leaning towards bullish. I think we're going to see metals continue to perform. I think they're going to be a defensive play here, and they're going to hold up. Now, if and when the stock market does have some type of significant pullback, some sell-off, I think they're going to be under pressure, and they're going to get pulled down with it. But I think what we're going to see is it's not going to be a straight line, obviously, but we're going to see gold and silver move up, probably January, maybe February. They have very strong chart patterns still. They're consolidating. They're in a somewhat of a downtrend right now, but the big picture is they are set to go a lot higher. It really just comes down to what kind of selling do we get in January and February? Do we get panic selling, where the VIX spikes and people liquidate everything, including their defensive plays like gold and silver and miners? Or do we actually just see that fear kind of slowly increase, but it's not panic? And when fear increases without the panic, that's when people move into defensive sectors, kind of like bonds, and we see utilities, and we see the metals do well. So I think that's what we're going to see. Fear is going to continue to rise. I don't think it's going to be panic fear. And when that kind of fear happens, we're going to see money move into the metals in the miners. So I think they're going to continue to go higher for the first couple months of the year is the game plan.
Would the junior miners still be considered a bargain?
I think they are. I mean, it depends which ones you're looking at. The gold miners are clearly in a downtrend. They're in a long term, they look very bullish, but they're in a downtrend right now. If you're to look at the silver junior miners, like the SILJ, it is making higher lows, it's making higher highs, so it is more or less in an uptrend. It's trying to get legs to move for the next big run. So you really need to be selective. I don't think you want to be in the gold miners. I think if you want to be in them right here, you need to be in the silver miners because they keep showing signs. We get flashes every couple of days where they just perform better than other assets. And out of all the precious metal assets, they're the ones to me that are primed and ready for a really big move. Now today we're seeing it down 5%, this batch of stocks, but it's also had a very big run in the last, really just the last week and a half. It's moved, 17% to the upside. And so it needs to shake things up. You can't just go straight up without the odd little buck in the market. And that's what I think today is. It's the market shaking things out. There was a big gap on the chart from a few days ago where it gapped dramatically higher and then continued to go up. Well, price typically comes down to fill those gaps. And today, a 5% correction has filled that gap. So I think we're seeing panic in this sector. People are panicking out. That's what creates a market bottom. And we've filled this gap. So I'm really liking silver miners. I think they're the ones to look forward to going into January, February.
We'll have more with Chris Vermeulen right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, is anything going on with crude?
Yeah, crude oil has been a little bit of a wild ride this week. Obviously, if COVID really wreaked havoc and was to take off, we're going to see crude oil start to pull back. That's exactly what we've seen this week on the news on Monday. Crude oil fell over 5% on that news. Now, it has recovered quite a bit of that on Monday by the closing bell, but we're seeing it trade lower again. And overall, obviously, extended lockdowns are starting to happen. That is not good for crude oil. Transportation, travel restraints are now happening in different countries and provinces and states. So I think crude is going to be in for a little bit of a struggle here. I think it could get a lot more choppy and consolidate, which is perfectly fine. It's had a very strong run. The more it can trade in a sideways formation, maybe trade between this $50 and $40 for a little while, it'll actually build a really strong base that I think early spring we could see it break out of this pattern and could be actually heading much higher. I see $64 for crude on the upside. So there's a lot of upside potential here, but I think it's going to have a little bit of headwind as we go into winter, COVID ramping up, and COVID restrictions might drag out a lot longer than people anticipate. And I think that's when crude is going to have more pressure, as in a month or two when people realize, wow, we are far from restrictions letting up. There's just not going to be the supply for crude. We're going to see that mass glut of oil stored everywhere, and it's going to have some type of correction. And I think that'll be a great opportunity going forward to get long once that turns around.
What's going on with Bitcoin?
Well, Bitcoin is definitely on this rip to the upside. It's got lots of volatility, big intraday price swings. It's holding up around this $24,000 level. Based on this price action, the next upside target is showing around 26,200. If we get this final kind of push, or this next leg up, not the final, but the next push higher. So it is holding above the 5-day moving average, which is very critical for this trend. As long as it can hold above that, it's in this high momentum move, meaning it can keep running by leaps and bounds. So the next stop, if it can hold this level here, is going to be around 26,200, 26,300. Pretty nice little gain from where it is trading today. That's about a 13% move to the upside. So you still have to be, if you're in Bitcoin, you should be bullish. It's looking like it's going to go higher, but just know it's in a stage, in a type of price action where it's going to be moving 5, 10, or 15% in a day here, and you never know which way it's going to go. So it's definitely holding a firecracker with the wick lit. The question is, which way is it going to go, and do you get out of it at the right time?
Did we have a true Santa rally this year?
That's a good question. It feels like it's kind of been like a stealth rally. Really, you look at that November kind of the week of the election, and then that vaccine news that there was a vaccine that worked. That almost felt like it was like the rally, and it happened all on news, and that was really most of the move. The reality is the SP 500 is only up 1% from that spike high that we saw on the vaccine news right after Biden had won the election. So it's not up a lot, and it feels like the markets are going higher, but in reality, 1% gain over the last month isn't that much of a move. So, yeah, if you're in the leading sectors, obviously some of these sectors have just rocketed to the upside. There's definitely a holiday rally in some sectors, but when you look at the stock market in general, like the SP 500 and the NASDAQ, they're completely lagging. And where the holiday rally is in the small cap stocks. People are buying small caps, and that is where the movement is. And that's where I think we're going to continue to see some more growth come January. I think this group of stocks is where the money is going to continue to flow.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show, Jim. Always a pleasure.
And have a great Christmas with your family.
You too, yes. Great time of year.
My guest has been Chris Vermeulen from the technicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.